Nothing in life is certain, they say. Nothing comes with a guarantee. Not your job, not the fuel prices, not the stock market. But they're wrong. There is one thing that's certain. One thing that comes with a guarantee. The Bajaj Allianz Guaranteed Maturity Insurance Plan. At maturity, it guarantees you a minimum double the amount you have invested and also the potential to actually earn more than that. Bajaj Allianz has created a plan in the true spirit of innovation. It is the only ULIP that guarantees to double your money. It is the only ULIP with nil allocation charges in a premium size of 5,000 rupees. It is the only ULIP which offers an investment through multiple guaranteed maturity certificates or GMC for your convenience. With this plan at maturity, you get the higher of guaranteed maturity value or fund value. Let us explain this with the story of Ravi. He invested 1 lakh rupees. Since each maturity certificate is worth 5,000 rupees, he had 20 GMCs at inception. The minimum amount he gets at maturity is therefore 2 lakh rupees. Let's see what happens to Ravi when his investment reaches maturity. At this time, if the fund value goes down below 2 lakhs, for example, it becomes 1,75,000, Ravi still gets the higher of the two, that is, the fund value or guaranteed maturity value. He makes 2 lakh rupees. However, if the fund value goes up, it might even become 2,10,000 rupees. The same principle applies. Ravi still gets the higher of the two, and at maturity, he makes 2,10,000 rupees. While the policy term is 10 years, a partial withdrawal can be made after 5 years. However, during the entire policy term, a maximum of 1/3 of the GMCs can be withdrawn. The amount payable in this case will be the fund value pertaining to the GMCs being redeemed. Now, just to answer a few questions. What is so special about Guaranteed Maturity Insurance Plan? It is the first ULIP with a single premium as low as 5,000 rupees that guarantees to double your money in 10 years. What is the advantage of certificates under this plan? Every partial withdrawal you make in this plan will have to be done by redeeming the GMCs. Since you withdraw in terms of GMCs and not in terms of a specified amount, you do not compromise on the guarantee on the GMCs which you hold till maturity. Could you please explain the concept of partial withdrawal with an example? Let's go back to the story of Ravi again. Suppose he paid a single premium of 3 lakh rupees. This means the number of GMCs he holds is 60. During the entire policy term, he can make a partial withdrawal of 1/3 of 60, that is 20 GMCs. He can redeem these 20 certificates either in a maximum of 20 instances or in one instance. If he does it in one instance, he will not be able to make any further partial withdrawals. Investment in PPF will fetch a return of more than 8%. Why will I invest in this plan? PPF requires regular annual contributions to be paid, while GMIP is a single pay plan. The liquidity aspect of PPF is low as compared to GMIP. Fixed deposits provide a return of more than 8% and require a one-time payment. How is GMIP better? Interests above 10,000 rupees in your FD are subject to tax deduction at source. This reduces your net returns. The partial withdrawals you make in GMIP are tax-free. Premature encashment in fixed deposit is subject to penalty, while in GMIP, anytime after 5 years, you can make partial withdrawals when no penalty will be applicable. Clearly, the flexibilities associated with GMIP outweigh the features of fixed deposits. A few working rules to remember. Age proofs. Both standard and non-standard age proofs would be accepted. Non-standard age proofs. Max SA allowed under GMIP would be 5 lakhs. There would be no NSAP extra for this. SPL relaxation. No age proof would be required for SA up to 50,000. Female lives. For category 2 and 3 female lives, husband's insurance and income proof would not be required for SA of 5 lakhs. Minor lives. MLQ, sibling insurance and parents' insurance would not be required till 5 lakhs SA. Illiterate lives. No medicals up to SA of 2 lakhs. Occupation guidelines. No occupation rating. Instant issuance of STP cases. Welcome letter will be generated consisting details of SA, number of certificates and basic information. Photocopy of proposal forms not allowed. A copy of the policy document will be sent by email. SMS will be sent to avoid mis-selling. Can accept cash more than Rs 50,000 if the PAN card is present. If the existing SAR is less than 1 crore, SAR of GMIP would not be added for SUC calculation. Financial UW guidelines. Existing financial UW guidelines would be applicable. AML and KYC as per existing guidelines.